Welcome everyone. Thank you for joining for Ben's office hours today. Just a quick note, since this is on a public platform, some of the stuff that if you're asking questions, we might be kind of using it for the founders group purposes. And if you would like to maybe keep your questions anonymous, just let me know, and that way we can kind of maintain that for you.
Anush, where are people posting questions? Are they posting them in the Google Meet chat or
Yeah, just
on the founders group?
Just in chat over here. Yeah.
So guys, you can actually ask a question anonymously by like a tech. There's a gimmick on Google Meet where you can do that. If you click the three dots or the dot matrix at the bottom right, you can click Q&A and then ask a question, and then there's a checkbox that says post anonymously. So there's a way to, yeah, there we go.
I guess I'll start it. I'm just here to be around like-minded people and to gain knowledge. And I don't know how this format works. Do we just ask questions and you help us out? Or how do you like to do it, Ben?
So typically Anush is the moderator. And I know we have at least one question that came in through chat beforehand. And then there was another one that got asked on the LinkedIn post yesterday, which was, why do we want to give money when people come seeking advice? Which I thought was an interesting question given the post. Yeah, so Anush typically runs the show, and you're welcome. You guys are welcome to drop any questions that you have in chat.
Yeah. So Ben, to get started, do we want to kind of first address some of the questions that were already posted before, and then as more questions come in, we can just kind of go through them?
Yeah. Yes.
Okay. Awesome. So let's start with the first one over here. Anonymous question. Just had a quick question, if you don't mind. As a founder who has founded and moved on from multiple companies, how do you know when something is worth continuing versus when it's time to move to the next thing? Not the tactical signs, but the internal signal. How do I know if my company is the right thing to keep building, or if I should be doing something else? Do you regret moving on from some of the companies you've built?
No, so I'll start at the end of that one. I don't regret any of the companies that I've moved on from. There are so I think people tend to hold on too long rather than to let go too early. And I totally get that. It's like, it feels like sunk costs, like you feel like you would have to start over if you went and did something else. I think just like with relationships, I think people are more likely to leave too late than too early. Yeah, there aren't any of the companies that I wish I had stuck it out longer with. There was one that I do think would have worked, but I was transitioning industries, and I built the product that I needed, and when I didn't need the product anymore, I wasn't that interested in building that particular business. So more, if we're generalizing that out to more broadly, kind of how do you know, what I would say is pay attention to what the market's telling you. The market research and the customer discovery in the early going before revenue, that is the key to the whole game. And until you get $1 of revenue in the door, everything should be oriented toward, what do people think about this? How can I get to the spot where someone will put their hard-earned American dollars in my pocket? And up until then, like, you should always assume that your business is going to fail, and you're seeing if you can prove yourself wrong. That's true for me too. And unfortunately, I proved myself right a bunch of times before finally proving myself wrong. So there you go.
Yeah, thank you for that, man. I know, like, it must be kind of crazy for you having gone through like, so many different iterations of companies and trying to figure out, okay, what's how do I do it this time?
Yeah. Yeah, it was definitely discouraging. Like I again failed a bunch of times. Thankfully, only put investor capital at risk once. But yeah, there were definitely moments where I wondered, man, do I have what it takes to do this? Like I keep banging my head against the wall, and maybe I need to go do something else. But kept hanging in there, and finally at age 43, finally got to a first exit. So that was an interesting journey for sure.
Awesome. So as we're still, looks like Siddhartha, you have a question?
Yeah,
Siddhartha,
I do have a question actually. Thank you so much for your time, Mr. Wiggins. The first thing I wanted to basically ask you is, um, what would you say ever is it's you'll be too old to ever do anything, or do you still think that, you know, most millionaires can come after the age of 40 and whatnot? Like what is your thought on people starting early, trying to figure something out at an early age? And then I'll just give you my situation is that I exited a company at 21 and then I started my second one now at 22.
Mhm.
And the main thing for me is like I know what I'm building is something that people want, and there's a distributive force, but there are some sunken cost. There's a sunken cost fallacy, which I'm sure you understand, where it's like, how do you optimize your time to make the most of every single day? Is basically my question after all that.
There were a lot of questions in there.
Yeah.
How do you optimize your time to make the most of every day is like, that sounds more like a life question, unless you're talking about like professional time management. But I think maybe the best thing to do, guys, would be just go ahead and drop like, let's let Anush do the moderating and go ahead and drop the questions in chat. But I would say, so to answer the first question that you asked, is anybody ever too old? No. Is anybody ever too young? Also no. Like to me, there's no bad age to be an entrepreneur. I still plan to be an entrepreneur when I'm 90 years old, 95 years old, if God willing. Um, so uh, so and you said there's a lot of complicating factors. I'm not quite sure how to answer the last question, but if you do have follow-ups, Sudhanva, I'd be happy to see that drop into chat, and Anush would be happy to pass that along, I'm sure. But
Thank you.
no such thing as too old or too young.
Thank you.
awesome. Yeah. We do have another question in chat, Ben, for you
Great.
from Lou Manuel.
Okay.
He's asking, the consensus on my deck from both the community and his private advisors is that he needs to revisit the entry tier and to charge less.
Okay.
This product went from 3 tiers, the cheapest being more accessible and cloud-based, to being two full local. Okay, so the cheapest being cloud-based, and then the other two options being local-based. The accessible option is priced out now. He's worried that bringing back a cloud option compromises the product integrity, but he thinks that if he did a public video about it, it could be forgiven. SVA kind of flopped. Do you think bringing back the cheaper entry and asking for less pre-seed is the move?
There's a lot of additional context that I think would be needed to answer this. I'm not sure what bringing back a cloud option, like, what does that have to do with a public video? I don't understand how that relates to a public video.
Okay, so can I talk in here or no?
We'd prefer to have Anush moderate, and just I guess I'd love to see the questions. I know this is not an easy thing to do necessarily, but we go ahead, Lou. Go ahead, Lou. Let's try to sum this up in less than 45 seconds.
I'll keep it very quick. Two of the models are fully local, and that's like the tech that I'm proud of. That's what I created, is like the local stuff. I had an
Yeah.
option that was cheaper and easier to build and cloud-based, and I could just get those right out. I
Okay.
don't want to do that because I don't want to make another like app that you're just on all the time, stuff like that. And I don't want to be seen as like trying to collect people's data when that's not what I'm trying to do. So I could bring back the cheaper option and probably get funding and probably sell a lot of them quicker, but at the cost of doing the opposite of what I said I wanted to do.
Okay, that's a fair question. So I think if you're clear about what you're trying to do and express that, that this is, you're not trying to steal a bunch of people's data, you're just trying to offer a cheaper option. I think you'll get good feedback from your audience on how they feel about that. I would not worry about spoiling the whole batch of apples with a move like that. I would say your instinct is probably correct. And bringing back a cheaper entry point is probably a good next thing to experiment with, because all of this is experimentation in the end, in early stage. Thank you for the question.
Perfect. Thank you.
Mm-hmm.
Okay, Ben, next question we have from Austin Lawrence. They're asking, there's a founder that is building a new game show concept.
Okay.
It's a two-part question. Is the new game show market one that investors have strong interest in currently, and what kind of investors would be interested in this area?
Honest answer is no. I don't think that there's a ton of interest in that market. I think that entertainment in general is a lot of investors see that as a pretty suspect market. And because it's the first thing to go. If there's a recession, if the market slows down, the market is extremely fickle. Things get hot and cold very quickly. Now, can you find an investor who's interested in this? Sure, you can find an investor who's interested in almost anything. But the danger of asking a yes or no question is that you're going to get a yes or no answer. And the honest answer is no. I don't think that's a particularly good market. Having said that, would love to see you come by and pitch sometime. We have weekly pitch meetings at the Founders Group, and you drop your deck on the website, get over to the Discord, and put it up for deck roast. We would love to see you come pitch.
Yeah, absolutely. I don't know if people can see it, but the link is right up here behind me. So
all I can see is .group.
okay. I think it's just condensing it. Okay, I'll drop the link in the chat. But yeah. So Niels got a question for you, Ben. Oh, actually, was that?
That might be a response that's a response to Lou. And there's a question above that from Sudanva.
Oh, yes, absolutely. Okay, so this is going back to what he was asking you before. What do you look for from a founder that you would typically back? And he was, in his question, he was asking about professional time management.
Okay, great. No, yeah, very good question. So what I look for in a founder I back, and we didn't try to make this like some sort of formal framework, but there were these words that we used to describe the founders that we like. And it turned out there are three C words at first. And then there were kind of two more that we added on. And these words all happened to start with C. Huge coincidence. But so now we call it the 5C framework. We didn't set out to build a formal framework, but it's the 5C founder framework. And calm, capable, curious, coachable, committed. I'll go through all of those. So calm. The deal about calm, it doesn't mean like, a lot of us are ADHD. So like, I would say most founders are ADHD in some way or another. But the idea is steady progress, emotionally steady, high energy or low energy. That's either one is fine. But the idea that it's steady progress over like grandstanding. If I see a founder that I'm thinking about backing, like whining on LinkedIn about something that some VC did them wrong or whatever, I'm like, how long is it gonna be before you're talking about me? Because I try to do the right thing by everybody, but some folks are looking for a fight. I don't want those founders. I want founders who are determined to make steady progress and don't go emotionally crazy when things get tough, because they will always get tough. Like, that's just founder life. Stuff is tough. If this were easy, everybody would be doing it. So the ability to keep sailing through when you're short on runway, and then the product has to get shipped and the sale has to get made, and a million people are demanding your attention for a million different things. Can you stay steady? That's calm. Capable is like, there's capability. People talk about like investors only back M7 business degrees. They only back, they only back prior exits, all of that stuff. Those are good signals of capability, but there are many other good signals of capability as well. Capability is just being able to do the work. And you are who you are. So the best way to manage the capability aspect of it is just keep learning. Keep learning. Always be open. The best advice I got going into business school when I got my MBA was students always show up eager to prove how smart they are. If you instead, and so that's an output, right? So you already, that you are, however smart you are, and so that's a focus on an output. This professor said, focus instead on inputs. Focus on, show up thirsty to learn. Always be looking for the opportunity for you to learn something that you didn't know. And I try to take that approach. Anytime I'm going into a new business or whatever, I'm always quick to say, here's how much I don't know. There is some stuff I do know. There's a lot that I don't know. Please be willing to educate me, and please forgive my ignorance as we get into stuff that I just don't know about yet. I always try to lead with, I certainly don't know everything. And that's but capability, always be trying to make yourself better. Curiosity. Curious is about taking a scientist's approach to things, starting with a thesis and then trying to see, like, can we prove this with empirical data? Can we what is the data actually telling us? What are our observations actually telling us? We're trying not to get married to our assumptions. We want to consistently question everything and not care about who is right, but only care about what is right. Sometimes the best answer will come from the fellow or the intern in the corner who doesn't speak a whole lot. But then on occasion, when they do raise their hand, what they have to say is really important. And my job in those situations is to shut the F up and listen. Just because I'm wearing the leader hat or whatever doesn't mean that I always have the best answer. In fact, it frequently means that I don't have the best answer, because that's just the way these things work. So try to always, every person that you meet has something to learn from you, and every person that you meet has something to teach you. That's what curiosity is about. Coachability is a cousin of the same thing. Just being willing to listen to feedback. Anytime the two first words out of your mouth, anytime an investor gives you feedback, or anybody gives you feedback, two first words out of your mouth, thank you. That person valued you enough to offer their opinion. Now, sometimes, they're trying to be, they're trying to play the one-up game or whatever. That occasionally does happen. Don't engage. Just say, thank you so much. I really appreciate that feedback. Here are my thoughts on that. And ask follow-up questions. Say, tell me what you meant by this, because there might be even if that person is speaking from a place of ignorance, there might be a nugget in there that gives you the thing that you need to then to crack the code and make your business a giant success. And that has happened to me before, where somebody gave feedback that was not all that helpful, but there was one thing in there that was like, oh, that's really important. And then the final thing is committed. Just knowing that the person is not going to cut and run when stuff gets tough. And again, going back to the calmness, it will get hard. It is going to get hard. You're going to fail. You will, whether you fail writ large like I did, or you just fail writ small, you will fail. For sure you will fail. And when that happens, be ready to own it and be ready to move on from it. And always as the leader, be ready to say, I'm sorry, I was wrong. I was out of line. I said that in a way that I didn't intend. Please forgive me. People love when you own your humanity as a leader. So calm, capable, curious, coachable, committed. Those are the founder characteristics that we really look for here in the Founders Group. Thank you for that question. Oh, the time management question. Best advice I can give you, create big blocks of time. Jam all your meetings together as much as you can and create large blocks of focus time for yourself. Because if you can spend 30 minutes on something, it's not enough time to do anything. If you can spend an hour, that's pretty good. You can spend 2 hours, that's really good. If you can spend 4 hours, that's gold. When you have 4 hours to work on something and really get into that deep focus time, that is when your brilliance will come out. So try to put your meetings together as much as possible. I have to do a lot of meetings. I try to always block them, ideally in the late afternoon. So that I can have deep work focus time in the morning. We got a lot of stuff in the Founders Group that happens late mornings. So if you have 2 blocks of meetings, again, just try to squish them together as much as possible. So you have focus time early morning, focus time early afternoon. And then I also get a bunch of focus time on weekends, when, like I've got stuff to do with the wife and kids, but always that will be a primary focus for me. But when I can create 2-3 hours on weekends, man, that feeds my soul. Like that's when some of the best work gets done. So thank you so much for that question. That's a great question.
Thank you, sir.
All right,
Thank you
Anush,
so much.
what do we got?
Next one. I think Lou's following up from sort of his earlier question. He's now asking, moving from the decision to bring back the entry tier,
Yes.
does the feel and language in his pitch deck need to shift from here it is to this first, then this later, coupled with scaling back the ask?
Yeah, I would say yes. So anytime you're thinking about a tiered business model, like just for example, like a freemium business model, you have to think really carefully about what are the features that you do get for free, and then what is the stuff that you have to pay for. And thinking about the customer psychology and how it layers into all of that is really important. One of the things that we talk about in the Founders Group is we are happy to help advertise free services on behalf of our members. And we are well aware that the reason someone would do that is because they then want to get people into a funnel by which they can charge for those services. We know that, like everybody knows that. But our condition though is that the free service has to be a significant value add on its own. And it's not something flimsy that it's really only to get you to pay for something. If the free service has value add, we cheerfully advertise that stuff on behalf of our members. And we know people are there to make money. Of course they are. But if the member can come away saying, I'm really glad I had this, and maybe I will spend money on this, but even if I don't, this was a great thing for me to have access to. So considering that psychology in your deck, Lou, I think is really, really important. Yes, I would stair step it, and I would spend a little bit of time on the psychology. You could even develop an ancillary slide where you talk in a little bit more detail about that, and don't put it in the primary presentation, but be ready to step into it in Q&A. If somebody asks you a question about that, you say, I'm so glad you asked. And then you go over to the ancillary slide and you start walking them through it. And the investors are like, man, this guy's prepared. You can put 50 ancillary slides on a deck if you want to. You can put 100, 1,000. It's not required, of course, but the deck, your pitch deck should be usually for angel networks, 9 to 12 slides. Sometimes for VC, they want longer pitches, like 16 to 22 slides. But ancillary slides, you can have as many as you want. There is no limit, because as long as you can find them quickly. Because when somebody asks you the question and you're like, oh yeah, great, here's a frame of reference, click, 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 click. Glad you asked about this. Let's talk about the unit economics, or let's talk about the customer journey, or let's talk about, a little more detail on the total addressable market. We sized it top down. Now we're going to go bottom up. So glad you asked, Mrs. Investor. Great question. Thank you.
Thank you, Ben. We have our next question from Sam.
Yeah.
They're asking, what is the current target MRR for getting funding, and what are some signals that you actually need funding, that your business/app is ready to scale and should scale?
That's a great question. I love you, Sam. Thank you so much for being here today. Let me know when you're seeking funding. Can't wait to invest in the next thing.
Yes, sir.
So current target MRR for getting funding, I would say it depends a little bit on growth, which, obviously it's a little bit chicken egg. But I think as soon as you get your first MRR in the door, I think that is a good time to start talking with investors. And I know I'm not exactly answering the question, but I think the best time to start conversations with investors, whether you're ready for funding or not, go ahead and start the discussion now. Investors love nothing more than to be able to follow you through the journey. Even pre-revenue, if you're going to them and saying, hey, I am not ready to ask you for funding yet, but I will be probably in the next 3 or 4 months, or even in the next year. Here's kind of where I am right now. Doing something like an investor relations newsletter, and I know, Sam, we've talked briefly about this kind of thing before,
Yeah.
but yeah, an investor relations newsletter, some LinkedIn content so your investors can kind of follow what you've been doing. By the way, Sam, I saw what Anna posted yesterday or the day before about Cloudfruit. I like seeing those kinds of updates.
Cool.
So current target MRR, I think like any MRR is a good time to start the conversation about funding, and let the conversation with the investor kind of guide you on, because, and really, I guess what I'm trying to say is everybody's different. Like I was talking with NTAN yesterday about a founder that got to some really good traction really fast, and they were like, yeah, man, we would love to get this person in now. Unfortunately, we don't have a pitch meeting until August. So we'd like to talk to him tomorrow, but we can't fund him until like end of summer. And I was and so I would say it's almost never too early to start a conversation with investors, especially ones that about, here's what I'm doing. What do you think? Like, what would you like to see me get to before I come pitch to you, investor A? Investor B, same thing for you. Like, what's the typical marker for you? And I think you'll find the answer varies a lot. And then the signals that you need funding is like having trouble fulfilling the orders. Like when the demand is outstripping the supply, that's when you need to strap some rocket fuel to it. That's the surest sign for me.
Got you. Thank you, man. Appreciate it.
Absolutely. Thanks for the question, Sam. Great question.
Okay. Thank you, Ben. We have our next question from Austin.
Yeah.
He's asking,
this is great, by the way. Thank you so much for these great questions. Loving this.
yeah. Do you have any tips when doing a cold reach out to investors that will get them to actually want to respond to you since they've never connected with you before? Also, is it a good idea to call an investor at all, or would that be a red flag from an investor's point of view?
It depends on the investor. So what I would do is look for an investor champion and see if that investor will make an intro for you, even if they're not investing. Investors love hearing from investors. And again, even if someone's not writing a check, like if I hear from Echan Stahl, like even if he says, I'm not in on this one yet, but I'm taking a look at it, I think it's a good company, I like the founder, you should consider it. That's got my attention immediately. Calling an investor. So I'm very open to receiving like cold outreach, and there's specific ways that I have to disposition all that, just because there's, got a lot of demands on my time. But I always want to know about what's going on. And I've got a team that I work with to help kind of disposition a lot of this stuff. So I think for most investors, they don't, they know that if you advertise yourself publicly as an investor, founders are going to come ask you for money. That is the game. That is part of the deal. And so as a founder, I would say the way that you can differentiate yourself is ask for money, get advice, ask for advice, get money. I would see if you can find an angle by which you can ask for advice and see if there's a way that you can deleverage the time that the investor has to spend to give you the advice. Because when people come to me, what they'll usually say is, I'm founder X building Y. can we jump on a call? I would love to share with you what we're building. And that's okay. Like, I understand they're welcome to ask for that. But where I would love to talk with them is in a venue like this, where I can answer a bunch of the questions all at once, or in a scheduled pitch meeting like the ones we have with the founders group, where there's kind of a cadence to it. And like, I know Wednesday at, from 10 to 11 US Central Time, I'm going to be on pitch meetings with founders every time. I mean, unless I'm, on vacation or there was some kind of emergency, or, like a meeting I absolutely can't break. But every week, hell or high water, I'm on those pitch meetings. And starting a few weeks ago, I'm going to be on this office hours every week. And so figuring out a way that you can disrupt the investor's life as little as possible. Ask for advice instead of money, if you can, in the early going. And then, and also, this I think is the next frontier in the startup space. Ask for, explore advisory help. Not just advice, but actual formal advisory help. You know what an investor never gets asked for? How can I give you some equity? You want to get an investor's attention, you say, hey, I'm considering additional advisory help. I would love to give you the opportunity to watch me for a few months before you decide to invest, juice the amount of equity you have in the company, and increase the probability of an exit because your advice is valuable. What investor is going to say no to that? Like, that is, in the future, free money. That's free expected value for them. So talking with them, from an advisory perspective, and saying, instead of just please give me $1 million, saying, how could I give you $1 million? You get anybody's attention on earth doing that. So mine included. So if you say, hey, we're considering some additional advisory help, and I saw what you posted about this, that makes me think that this could be a strong fit. Some investors still won't respond. But yes, Lou, I would love to do that. I would love to do that. Let's talk. So we joke a little bit here, but not really. Like, if you go to an investor and say, hey, I would love to look at you as an advisory fit, I think you could really add a lot of value for us. It's something different. Sudhanva, I see it. Yeah, thank you guys. I'd love to have all of these conversations. So yes, that is, you want to figure out how you can be different from just all the other people that are saying, please, 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 please give me $1 million. And these are good ways to stand out. What do we got, Anush?
Next one.
Banu, I see you.
Yeah. So Sudhanva is asking, can you invest in pre-revenue, and what's the usual valuation that makes sense for a safe note?
Yes. So yes. Some investors, myself included, do invest pre-revenue. It is not super common in software these days. And I know most of what we talk about is still software. I do invest in pre-revenue, but what I'm more likely to do with pre-revenue software specifically, usually what we're raising money for is development help, right? It's normally there's a key technical capability that's missing. What I would say in that situation is that you're treating the investor as a middleman, right? In that situation, what the investor is doing is they're giving you money so that you can go pay a dev, and you're giving the investor equity, right? So you give up equity. Yeah, I hear you on hardware, Lou. So you give the investor equity, right? They give you money, and then you give money to the dev. So what you're out is equity, and what you have is dev help, right? Well, why not just make that a direct exchange? One of the things that we do in the founders group, like, cut the investor out of the process, and in the founders group, we will vet startups as candidates for development help. And we have a bunch of developers hanging out in the founders group because that's, like, there are a lot of people who are coming to the founders group are very capable technical founders, extremely capable. And they're founder types too. So it's not just they're good devs, but they're the type of people who, like, are leaders and want to be, shout out to Lee for sure, who want to be running their own thing. There are great technical founders around. And so one of the things that we are often doing now is matching. Yeah, exactly. Matching. And it's not any different than like Y Combinator's co-founder matching. But the one thing that we do have is for the time being, there's still a significant personal element to it. We're willing to vouch for the non-technical founder and say, this is a business that we think can make money. Success is never guaranteed, of course, but you, Mr. Mrs. CTO, Mr. Mrs. Developer, we think that you could add a lot of value here. Here is what we think could be a fair ask, depending on, and there's some negotiation around time and so forth. But so rolling it back to the question that was asked, do I invest in pre-revenue, pre-seed? Yes. In software, the most common recommendation I'm going to make is let's cut the investor out and see if we can get you matched up with the help you need, so that you don't have to take on capital. And then you can have an arrangement directly with the developer. In hardware, I think pre-revenue investment is commonplace. In space, pre-revenue investment is, I would say, more the rule than the exception. There are a lot of verticals where it's, and in medical device, I mean, you're almost always seeing, pre-revenue investment. So, and there are others too.
Anush, am I allowed to ask him a follow-up question on that? Because it was supposed to be a little specific, but I don't mind asking in front of everyone. I have no problem asking. So mine was more of to gain a distribution moat. Basically, it's not like software development is on one side, right? But we believe, I'm saying our team believes the thesis is now that distribution is the moat, not necessarily the software anymore. And so we believe that we can build a moat with the distribution partners that we can get on the table, and we want to use the investor money to be able to leverage and build those relationships and get those. In my situation, it's athletes. Get those athletes to buy in what we're doing. And we believe that we're going to be able to have institutional viability. We'll be able to have those athletes buy in because we have warm connections to them. So that's why I'm asking for investor money on a pre-revenue.
Yeah, interesting. That's an interesting approach. And then basically, are the athletes then, are they endorsing the product, or what is, when you say like to get them to buy in, like you're just
brand
it's
activation?
athlete?
So we're B2C
Okay.
to B. So they're brand activations, and we're targeting 100,000 users within 90 days, and we have a strict plan as to how we're going to get the activations, and then we're going to use like campus networks. So we'll have them go around colleges, and we'll have them kind of also push some paid ads as well. And we'll be able to work on that with them on a one-on-one basis.
You guys need to talk to Organized Campus. They're an outfit at Texas A&M that is that's basically a software platform for student orgs. That would be fantastic distribution for you guys. Shoot me a note about Organized Campus, Sudanva, and I'll get you connected with those guys.
Yes.
But yeah, so good. Yeah, good question. And I understand the deal. Yeah, go ahead.
Yeah, and also we already have our own collegiate athlete on our team itself. She's leading our distribution and content pipeline. So it's just the money to be able to pay the people we already have as well. So it's not about the software. I think it's more about the distribution, and that's why I think our deal is completely different than anyone else's that you've probably seen.
It does sound a little bit unique in that respect. There's unusual situation. I agree. So yes, that's I guess is the answer to that question. Back to you, Anush.
Yeah, all good. Sudanva, if you would like, go ahead and join our Discord group, and I'm sure there will be plenty of people that'll be able to help you out in there as well.
I'm in.
Okay. Oh, you are? Awesome.
Good to have you. What do we got, Anush?
Next question, Ben, is from Andrew.
Okay.
And looks like just in the interest of time, we might have to kind of speed through. I don't think there's too many after that.
I can stay for another 10 minutes or so.
Okay, awesome. So Andrew's asking, what would your expected advisory equity be? 0.25 to 0.5%, higher or lower?
Higher. There's so ChatGPT will tell you that that 0.25% to 1% is kind of typical for an advisor. I really think it depends on how involved they are and how early the business is. I've gone below 1% before. but it's unusual. And part of that is because I'm so hands-on. I really love talking up the investments on LinkedIn. You guys have all seen me doing that. I really am very aggressive about making investor introductions. But there is some expectation that like I'm not going to be the typical advisor who kind of sits in the background and just cashes the check when it's time. I do want to be involved. You could talk me down below 1%, but I would say is the juice really worth the squeeze for somebody like for either of us at that point? Like, because I'm not going to be able to do all of the stuff that will benefit you the most as a founder at 0.25% or really even 0.5%. I want to be with founders who are we're having conversation, asynchronous conversation multiple times a week about, all right, what about this? What about that? What about the other thing? And they're talking to my team as well. My team, like working with Tim, working with Raphael, working with Abhijay, working with Aaron, working with Savior, all of those gang to like get you the LinkedIn content that you need. We build LinkedIn content for a lot of our advisory clients. We're doing investor relations newsletters. We're doing obviously the investor introductions are part of that too, and then pitch refinement and deck refinement as well. So all of that just it comes with a little bit higher equity price tag. But but I'm also happy to sit on my hands and do nothing if somebody really wants to just swing me 0.5% for that. So go ahead, Anush.
Okay. After that, Andrew just had like a follow-up of like, so 1 to 3% better range, but then looks like people are already replying. And yeah, I think, and I agree with Sam. Ben is definitely a 10 out of 10 partner and advisor. So
thank you, Sam. I appreciate that. Appreciate the vote of confidence. And yeah, Andrew, I think 1 to 3% is typically what I ask for. Oftentimes, what we try to do is build some of that, especially if it's a founder that we're a little bit newer to conversation with, is to build something contingent into that. Now, what we can't do, people ask me to do this all the time, and I cannot do it. It's not legal in the United States. You cannot base equity on a percentage of money raised, or take a cash payout based on percentage money raised, or even build milestones based on the completion of the raise. The reason you can't do that is because FINRA and the SEC have really strict guidelines around what constitutes a broker-dealer relationship in the United States. And taking a percentage of investment is the strongest indicator that you are operating as an unlicensed broker-dealer in the US. And so anything that's tied to the success of the raise or the completion of the raise, like, we generally stay away from. However, there are other things like basing it on, like milestones based around total sales, milestones based around specific hires. Like, there's all kinds of ways that you can kind of sit next to, all right, the raise was successful, without actually building it around the raise. And that stuff is, the FINRA and the SEC have given very positive indications about things like that. So usually there's some flat equity, and then there's also some contingent equity. Sometimes, depending on stage, for some of the investor readiness stuff and the ongoing services, so there's sometimes a retainer involved, but we never charge for introductions. That is one thing that we do not charge for. Like that has to be clean, so to speak. Go ahead, Anush.
Yeah. So there is one question, but I think Lucius has a follow-up. He's
go
asking,
ahead. Yeah.
Is that setup optimal pre-seed or?
Yeah, I would say this can be used. Every situation's a little bit different. We have typically an advisory agreement that we send out, that this is kind of the boilerplate that we normally work from, but we're always open to discussion about what it can look like. That setup, most of who we're working with, we have a few clients at Series A, but most of what we're doing is seed and pre-seed right now anyway. So yes, that is oriented toward seed and pre-seed.
Okay.
What
looks
else?
like just got a few more minutes left. We have a question from way back, but it's basically an anonymous question. what are some triggers that a founder should be looking out for that would indicate a need to pivot?
It's a great question. I mean, lack of revenue is always, is always a red flag. The lack of revenue growth is a potential red flag. We, at Proclaim, we started Proclaim. Gosh, looking back, this is so stupid, but we started Proclaim as a consulting firm. It was podcast consulting in the early going, and nobody bought anything. So we were like, man, we have to try something else. And we know that, but the key was we knew there was demand in the marketplace because people kept coming to us and asking for like stuff related to their podcast. And so we were like, man, we know something's here, but we sure aren't approaching it the right way because nobody's buying anything. What are we missing? Right. And that, I think that's the question around a potential pivot is, and that this goes back to the curious mindset, right? It's what are we missing? What are we not seeing? Like just really trying to be in the DNA of your buyer. And what is it? What is the gap that we're not bridging for them? We're doing some stuff here, but what is it that is really not kind of closing the loop for them? Why don't they care? Which is, man, can be a heartbreaking question to have to ask yourself. But facing those difficult questions, I think, is key in the process of considering a pivot, or even considering, more encouragingly, considering a bolt-on, considering other services or, offerings that you might want to add to your product or service. I wish it was all like just kind of scientific, here's the formula, but the truth is, if you're considering a pivot, you're probably right to be considering a pivot, and in the end, you just have to use your best judgment, and get as much data as you can, and then listen to what the data says, and do not stand on your pride.
Awesome, thank you, Ben. I know, like that's probably a very common thing with a lot of founders. They're like just like kind of asking, questions. It's like, oh, like what's what's wrong? Like what's happening? I should be making so much money, but I'm not.
Yeah, man. I can't tell you how many times I've said that to myself. So, all right. So maybe let's do two more questions, Anush, and then I got to call it for today, and would love to have more of these questions next week.
Yeah, looks like we just got two more in the pipeline for you. So,
okay.
One from Leroy asking, does being an LLC affect the ability to obtain advisory services, and when should a company convert to C Corp?
Great question. Is not so the challenge with an LLC is that LLCs, it's mainly a tax issue, and LLCs are taxed as pass-through entities. So I'm good being an advisor to an LLC as long as there is structure built into the operating agreement that requires distributions to be made to cover tax burden. The reason this matters is the company has let's draw an extreme example, $10 million in profit, right? Great situation to be in. But let's say we reinvest all of that $10 million in profit, and I, as an advisor, own 3% of the company. Well, I'm on the hook from a tax perspective for 3% of that 10 million, $300,000 in profit. That's $300,000 in income that I am going to be taxed on. And so, and I would prefer not to get another giant tax bill dropped on me in the next few years. So there has to be some kind of structure in place for distributions to cover tax burden. That's the main thing. The other thing is, you kind of alluded to this, when do you need to switch to a C Corp? Basically when you're ready to go raise serious money. You could do a friends and family round through an LLC and maybe even a pre-seed round, but depending on who you're going to. But if you want to start raising like meaningful investor capital, it's time to convert to a C Corp.
Thank you, and I know that's a question we get quite often.
Yeah. This is a good question to ask because LLCs are simpler.
Yeah, and cheaper. Too.
Yes, true.
Less of a headache for sure. Okay, Ben, last question just before we close off for today. Sudava is asking, do you invest in exceptionally technical founders?
Absolutely. Love to invest in exceptionally technical founders. And sometimes there's some kind of reverse matching that we do in terms of helping them connect with a more sales minded founder, a more marketing minded founder, more, alignment and kind of leadership minded founder. Yeah, absolutely invest in exceptionally technical founders. And that one was a quick one. So we could do one more before we get out.
One more. Okay.
Or I
Nothing in
meant
the.
I meant like solo founder. That's what I was mean. That's what I meant by that.
Oh,
Without a team. Without a team, I'm saying.
Yes. Yes. Yeah, I'm open to it. I know Y Combinator's, I think, is not open to that anymore, but I still look at solo founders. What was the last one?
We don't have any more questions from the team right now, but
I see one in chat down here. If an opinion you don't agree with comes to you from more than one advisor or someone whose opinion you value. Oh, that's an
that's a
answer.
comment.
Sorry.
Yeah, that's an
Yeah.
answer. Yeah.
Yep. Okay. Yeah,
Um,
and I agree with this advice, by the way. Like if Cat Williams, I don't know if we want to put this on YouTube, but Cat Williams used to say, if somebody calls you, like if everybody's calling you a crackhead for 20 years, you were smoking crack.
So what is your favorite industry to invest in? I guess that's the last question I'm gonna ask you. Space. Deep tech. Deep tech.
Yeah.
Got it.
Yep. Love deep tech. All right. Thank you, everyone, so much. Feel free to send over the questions. You can send them to me, and I'll forward them to Anush, and we'll address them on next week's office hours. I also post on LinkedIn about stuff that keeps coming up. So thank you, everybody. Really appreciate the questions. Thank you all so much for your time today.
Yeah, thank you everyone for joining. And if you're not in the founders group, head over to thefounders.group. It's a very simple address.
Simple URL.
And yeah, come and join the group. We'd love to have you.
Thank you, everyone. See you soon.
Thank you, Ben.
Thank you, everyone. Have a wonderful rest of your day.
Thanks, guys. Take it easy.
You too.